I'll be talking actually not that much about Bitcoin, but as you can see, more about decentralized finance and whether it's hyper revolution or perhaps even both. As we heard from Anita, we probably all can agree that Bitcoin is really great and it's really important. I think it's the future settlement layer of the whole financial system. But in the past few years, there have been lots of development and evolution when it comes to cryptocurrencies in general, and that's something I want to talk about a little bit today. And the reason why, if I think it's really important to talk about it, is as you can see on this graph, that if we compare for many years since the beginning of the Bitcoin protocol, it's been always the king, had been the king for a long time. And when we compare Bitcoin and the second largest cryptocurrency network, which is Ethereum, when we compare these two in terms of transaction volume, daily transaction volume, we could witness in the past few months that the economic activity on Ethereum has been increasing really dramatically. And the reason for that is decentralized finance. That's why we'll be talking about it today. And what is really important to note when it comes to this graph is that this economic activity or transaction volume does not include the utility tokens and ERC20s, but it does include stable coins, so Ether and stable coins. And of course, stable coins make up a large portion of this economic activity. And why is that? Again, because they can be very well used in something we call decentralized finance. So what it is really? So we have many different protocols and financial applications that are currently being developed into DeFi space as a whole. There are some that are for sure kind of DeFi primitives, like the very basic backbones of the whole system. And among these, we include lending protocols for sure. Perhaps some of you have heard of protocols such as Compound, Aave, and some others that basically let you trustlessly lend and borrow money or borrow cryptocurrencies. Of course, most of them don't operate with fiat currencies, but they do operate with stable coins, cryptocurrencies pegged to the fiat currencies. From which probably the most famous one is Tether, and but we've seen like lots of competition for Tether in the last few years coming up as well. So apart from lending protocols and these so-called money markets, we can see there are also exchanges. Actually, in the past few weeks and months, we could see that some of the decentralized exchanges for the first time have been able to keep up with the trading volumes of centralized exchanges, which is something that we could have just dreamed of probably just 2 years ago. So it's really great to see these things coming and really developing so quickly. And but that's not the only interesting thing when it comes to decentralized exchanges, because because we divide them basically into two kinds of exchanges. We have a typical, like a kind of legacy model exchanges, which are called order book exchanges, where you just basically have to find a counterparty that for your trade. And we have something that has been very popular in the past year, let's say, so-called AMM pools, automated market makers, such as Uniswap, Curve Finance, Balancer, and so on. So how they are different is that basically they have something they call bonding curve against which every trader usually trades, which means that you don't have to specifically find counterparties for your trades, but this bonding curve will quote you an offer every time. And this bonding curve is being supplied by the liquidity pool providers or liquidity providers, which are incentivized to do so. So these are probably, so apart from lending protocols, the exchanges, then we have all kinds of derivative networks that allow us to create synthetic assets and financial derivatives. And all these, of course, as also Anita mentioned, on top of the permissionless, decentralized, censorship-resistant network, which is very important because historically these tools have not been accessible for vast majority of the population of the world. And it's really great that these technologies and these networks allow and make these tools accessible to everyone. So apart from that, we have all kinds of other stuff, wallets, aggregators, oracles, which are very important part of the ecosystem as well, because they feed the smart contracts with data that cannot be found on chain, but they are found in the external world. And what is also important to say that is these things are proliferating not only on the Ethereum network, but also to other chains, so-called layer 1 networks. For example, networks such as Cosmos, Polkadot, and so on and so on. So Ethereum is getting a lot of competition. This is probably one of the biggest differences between Ethereum and Bitcoin, that even though many people always, and especially the newbies in the space who are looking to make some quick bucks, they look for the next Bitcoin. Bitcoin doesn't have that much competition, or if probably doesn't have it at all, because it's even though it does one thing, but it does it very good. But Ethereum, which is a general virtual machine and can be used for many different things, has much more competition when it comes to the market now. So this is roughly how the whole landscape of the DeFi currently looks. And of course, we cannot forget the stablecoins themselves. As I mentioned, the Tether was for many years the most popular one. It's still the largest one in terms of volumes and the amount of issued. And actually, I think it was just this week that the amount of stablecoins issued on blockchains, whether it's Ethereum or others, reached $40 billion, which is a huge growth. When I think in a few months ago, we were just below 10 or 5 billion even. So it's growing really fast. So as you can see, these things really kind of prove that on Ethereum and possibly on other networks, smart contract networks, we really can witness now the birth of parallel financial system, like a full-fledged financial system that allows all these smart contracts applications to perform functions that we like, functions like brokers, banks, insurance companies, payment companies, and so on. These are all performed just by smart contracts, and all these things have been historically done and conducted only by financial institutions in a very much regulated way and walled garden that wasn't accessible to large portion of the population. So all these things are now being transferred and ported, and they are being evolved on top of Ethereum in the form of decentralized applications. And there is a good reason why many people believe that this is all just hype, because if you look at into the perspective, for example, the price growth for the last year, 2020, you see these crazy numbers, which still don't include the bull market of 2021. You can probably see it's really crazy, and it very much resembles the ICO craze that we have probably all remember from 2017. And especially also when we look what is now kind of the very customary way of trading when it comes to DeFi, and we see all this so-called liquidity mining trend, which is basically a way to attract the liquidity and users to your protocol by introducing some incentive mechanism, which is basically based on minting a new token. And all this makes up for very nice yields oftentimes. And it oftentimes make people behave very recklessly, because many of these applications have not been properly audited, and still people are throwing hundreds of millions, if not billions of dollars into these applications without really understanding what they are doing. So this is definitely something that's similar to ICOs. However, there is also a good reason to argue for or against that DeFi is only hype, because as I mentioned, it has some potential to really revolutionize the financial market and financial system as such. And but most importantly, if you look at this graph, these are data from November 2018, and these were at the time the top 3 or 4 dApps, like, or DeFi protocols, MakerDAO, Augur, Compound, and Uniswap. And the small cluster of yellow dots there is the cluster of users that have been interacting with at least 2 of these protocols. And it was a very small number. If we move forward to May 2019, we can see that generally the number of DeFi users has been growing, but still slow. It was still basically counted in a few thousands of users. But we could already see that also this so-called power users that have been interacting with 2 or more protocols have been growing a lot. And we moved to March 2020, which is still a year ago. So it doesn't include basically the last year, which has been marked by really tremendous growth. So already a year ago, there has been really lot of stuff going on in DeFi, as you can see here. And so it's not, and this is, unfortunately, I don't have the data for the current state. It would be very interesting to see how it looks actually these days, but I couldn't actually find any such data for the past few months, unfortunately. But anyhow, only these still pre-DeFi craze, these graphs are data from pre-DeFi craze period, show that the traction has been growing, the number of users has been growing, the number of protocols has been growing tremendously, and they are actually being really used, and they do bring value, and they do allow more efficient allocation and deployment of capital for sure, even though it's definitely true that it's to some way it's excessive, especially because of the liquidity mining programs that I mentioned already, and in the last few weeks because of the whole bull market and Elon Musk tweets and all kind of other tweets as well. But just to sum it up, why it is actually a revolution, and these are the main bullet points why this is actually true, which still doesn't exclude the other option that it's also a hype, because it's usually is the case. It's always the truth is somewhere in the middle. But yeah, just to wrap it up, when we talk about money in DeFi, and we do talk about really algorithmic money, we do really talk about basically a whole financial system built on the transparent pillars of the blockchain technology. We talk about really censorship resistant system that is completely permissionless and everybody can join it. And as we have basically all these financial applications in a single ledger, or that doesn't necessarily have to be a requirement, but so far it's like that in Ethereum ledger. We have all of them all in one ledger. They are completely composable, so they can interact with each other, and they allow us to do things that have not been possible in the legacy financial system. And imagine all these with the current trends, or like probably the future trends, that it will be more frequent and more visible in the future, how all these this whole tokenization of assets, how we tokenize NFTs and real world asset and all kinds of, basically all kinds of assets, including actually the Bitcoin, and that this also happened to have multiple versions of itself on Ethereum ledger, and all of them have a different risk profile and different profile in general, which is very interesting and probably very confusing for many people. But yeah, so let's just sink this in, how it's gonna look in the future when we have this one public global ledger that is full of thousands of financial applications that move algorithmically value across the globe and across the wide palette of assets. So I think it's very interesting to watch these kind of things. And we truly are talking about the revolution and the evolution of the financial system. Of course, there will be lots of hiccups. There have been lots of hiccups. There have been lots of hacks. There has been lots of recklessness, and but this is kind of also kind of a developer culture when it comes to Ethereum, which is definitely in opposition to Bitcoin, where the developers culture has been traditionally more conservative, and the code has been much more kind of safer when it got into the code base. And this is definitely not the case with Ethereum and many of the smart contract applications. And moving forward, probably everyone has heard of the upcoming milestone on Ethereum roadmap, Ethereum 2.0, which kind of already started last December, so something over 2 months ago. And we will probably see the final stage of it probably just in maybe 1, possibly 2 years. We will see. We don't know yet. But interesting to see the implications of this, because as you might know, that now even Ether can be staked directly on the network. And this will be very much interesting in terms of the dynamics and the incentives of the people to actually deploy their capital, especially now, I mean, Ether across the various applications. And because it can happen that too high yield provided by different decentralized applications could actually endanger the security of the network when it comes to Ethereum. So this is something that we don't know yet how it's going to play out. And of course, the part of the final stage of Ethereum roadmap is also sharding, which is basically one of the scaling techniques applied in Ethereum 2.0. And this might have lots of implications for the already mentioned composability of these applications, which again is still kind of a huge unknown how these things are going to play out in the future. And it's definitely a reason to still be very aware and very cautious when it comes to interaction with these applications in general. So that's all from my side. If you are interested into this, as well as many things that Anita already mentioned in her presentation, check out my upcoming book on this, on the history of cryptocurrencies, which you can find here. And I'll be looking forward to your questions.